President of the Greater Atlantic City Chamber of Commerce. Welcome to our first of 2026 virtual Lunch and Learn. Today, I'm excited to introduce to you Dani Mack and Debbie Kramer from Boardwalk Bookkeeping. They are going to be jumping into a presentation about building better books without the burnout. And I'm really excited to listen to what they have to say. And if a question comes into your mind while they're going through their presentation, please feel free to throw it into the chat, and there will be a Q&A portion of this program after their presentation. So Dani and Debbie, why don't you take it away?
Awesome. Thank you so much for the warm welcome. We want to start off by thanking all of you for joining us for today's Lunch and Learn. We would also like to express our deepest gratitude for the Greater Atlantic City Chamber and for Danielle Norcross for having us today. It's an honor to be invited to present, and we're very grateful for the opportunity.
Yes, thank you.
So to start off, I'm Dani. My full name is Danielle Mack-Leston, but that is quite a mouthful. So people tend to just call me Dani Mack for short. So a little bit about me. I spent my younger years working in the casino and retail industries, but in my late 20s, I decided I wanted change. So I started college at 28 and obtained my bachelor's degree in business, and then transitioned into more office administration and management roles. But out of all of the areas of business, I found I was mostly drawn to and excelled at accounting. But not all accounting is equal. Some people are drawn more to the tax side of things, and some are drawn more to the audit side of things. But for me personally, it's all about creating clarity out of chaos, because a puzzle without all of its pieces doesn't create the same masterpiece. And much like a puzzle, every number has its place, and in its place it should be. So once the pandemic closures opened up the doors to virtual work, I saw an opportunity to enter the virtual bookkeeping realm and started the firm back in 2022. And then a couple of years later, I found my partner.
And I'm her partner, Debbie Kramer. Together we run Boardwalk Bookkeeping. It's a virtual bookkeeping firm, and we're based right here in Atlantic City. A little bit about me. In high school, I started taking accounting classes, and I was getting hundreds and 99s. So I figured, hey, I might be good at this. I loved making all the numbers equal. So I continued taking accounting classes in college. Throughout my career, no matter what job I took, I always ended up gravitating to the finance department and then usually taking over, because some people just understand the stuff and some don't. Most of my years of experience are in construction and municipal finance, but I always find it exciting to learn new industries and how they work. When I found Dani, we seemed to complement each other because we had different specialties. She was good at some things, I was good at others. So we put our heads together and partner up, and here we are. And just a little tidbit of information without giving our ages away. Together, the two of us have over 50 years of experience. Just the two of us, not including our team.
And that is a lot of experience, which we're very proud to be able to say. So before we get started, we just wanted to let everybody know that this morning an email went out that has two documents in it. One is a copy of the slides from today, and the other is a worksheet. This worksheet can be used as a tool to jot down any questions that come to mind during the presentation, so that you can ask them at the end for the Q&A. So feel free to either jot your questions down or drop them in the chat, and we will go over them with you at the end. And so let's get started. We also have, I wanted to also include that we have some self-reflection questions within each section of today's presentation. These questions are designed to get you to contemplate your own bookkeeping and to help you determine if you have any areas in your own books that have room for improvement. You can also use the worksheet to jot down your answers to those self-reflection questions as well.
So, which bookkeeping tasks? Oh, sorry, Dani, do the disclaimer.
Yeah, I'm just going to read the disclaimer real quick, and then we'll hop into that one. So this presentation is for informational purposes only and does not constitute accounting, tax, or legal advice. Every business is unique, and you should consult with your own accountant or tax professional regarding your specific situation. So with that all said, now we're going to just jump right in. Go ahead, Debbie.
All right, so which bookkeeping tasks actually matter? Most bookkeepers, or I'm sorry, most business owners don't start their businesses because they love bookkeeping. They do it because they love what they're doing, their craft, their service, their mission. That's where we come in. We want to help the small business owners keep their books clean, organized, and useful because bookkeeping shouldn't feel like a mystery or a root canal. And it's what we love to do. It is our passion, it's our work. So everybody stay in their own lane, basically. So today we're going to walk through something simple but powerful. Which bookkeeping tasks matter each week, month, quarter, and year, and how to stay on top of them so you can save a lot of stress and surprises and your late night panics with your spreadsheets, because it really can get out of hand quite quick. Our goal today is not to turn you into bookkeepers. It's just to help you understand what should be happening behind the scenes in your business finances. One of our biggest questions we hear from our business owners is what bookkeeping tasks actually matter, and more importantly, when am I supposed to do them? So we're going to break this down into 4 manageable rhythms. We're going to break down what you should be doing weekly, monthly, quarterly, and annually. So if you're ready, get your pen to start jotting down questions. Here we go.
All right. So first up is our weekly bookkeeping habits. These are those small things that keep problems from snowballing. Now, none of these tasks take very long, but skipping them is where we see businesses start to get into trouble. Some of those most common weekly tasks include: number 1, uploading and organizing your receipts weekly keeps your books clean, your deductions supported, and your future self very grateful. It turns what could be a year-end paper chase into a quick, consistent habit that makes reconciliation and reporting way smoother. Depending on your accounting software, most offer the functionality to attach digital copies of your receipts right to their corresponding transactions. We highly recommend adding this to your weekly bookkeeping routine because it can save you valuable time if you ever find yourself in an audit. So here is our first self-reflection question. Are you keeping your receipts organized as you go, or are you saving yourself a chaotic scavenger hunt later on down the road?
The shoebox. Everybody has a shoebox.
Everybody has a shoebox. Number 2, monitoring your cash balances weekly keeps you in tune with what your business can afford before decisions get made for you. It helps you spot dips in your income, plan for upcoming expenses, and avoiding that awkward moment when your bank account says, not today. And so now I have another self-reflection question for you. Are you proactively managing your cash, or are you only checking in when something feels off? Number 3, reviewing your bank activity weekly helps you catch errors, duplicate charges, or anything suspicious before it snowballs into a bigger issue. It also keeps your books accurate in real time, so you're not relying on outdated or incomplete information when making important business decisions. Here's another self-reflection question for you. Are you staying on top of your transactions, or are you letting them pile up into a future headache? Number 4, tracking your upcoming payroll and tax deadlines weekly keeps you ahead of due dates instead of racing against them at the last minute. It helps you plan for your cash outflows, avoid penalties, and make sure nothing slips through the cracks, because the IRS simply does not accept "I forgot" as a strategy. So here's another self-reflection question for you. Are you staying one step ahead of your obligations, or are you constantly playing catch up? Some of the tasks we just discussed can be set as reminders to trigger action. However, some aspects, such as the flow of transactions in your bank account, can happen rather sporadically, often with no real rhyme or reason. Even a quick weekly review can prevent problems like duplicate charges, fraudulent charges, or even missed transactions. We've seen situations where a $30 subscription was accidentally charged 3 times per month for over a year. Nobody noticed. We've also seen fraudulent charges get missed until it's too late to dispute them. Most companies give like a 6-month period of dispute. So if you're dealing with your bookkeeping at year end, you're going to miss some of those things that could be disputed throughout the year. These are the kinds of things that weekly check-ins prevent. Think of weekly bookkeeping like checking the dashboard in your car. You're not going to wait until that engine light has been on for 6 months before taking a look at what's causing the issue. So now we're going to move on to monthly tasks.
I just want to say, Dani, those are a lot of really good points. Even just taking a week vacation, a week turns into a month, turns into a quarter, and you just don't realize how fast the time flies. And also with the chargebacks for credit cards, your credit cards don't call you saying, hey, by the way, somebody disputed a charge. Like you have to be on top of that, and things do time out and expire.
Correct. Timing is of the essence when it comes to your bookkeeping.
Yep. With that said, let's move on to the monthly tasks. This is where the real financial picture of your business starts to come together. So let's review some of the more common monthly tasks. Number 1, recording your income and expenses monthly keeps your financials accurate, up to date, and useful for decision making. It prevents transactions from piling up into a confusing mess and ensures you always have a clear picture of how your business is performing. As expert bookkeepers, we tend to record transactions on a daily and weekly basis. We are literally in your books like every day recording these. But if they're recorded once a month, you can prevent future overwhelm. Self-reflection question. Are you staying consistent with your books, or are you letting a few missed months turn into a full-blown cleanup project? That is not fun.
And it's expensive.
Number 2. Reconciling all your accounts monthly keeps your financials accurate and trustworthy, not just your bank and credit cards, but your loans, your payroll liabilities, your sales tax, and any other balance sheet accounts that can quietly drift off. It means matching your records to statements, verifying balances, and making sure nothing's duplicated, missed, or sitting where it shouldn't be. Self-reflection question. Do your account balances tie together, or are they just close enough and you're hoping no one's looking too closely? We cannot stress enough how much you should reconcile your bank accounts every single month to see if, like we just said, if anything's missing, if it's duplicated. You don't want to overstate your income and pay more taxes. You want it to be clean and you want everything to equal. Number 3. Sending invoices and paying bills monthly keeps your cash flow moving in the right direction. Money coming in on time and going out with intention, not panic. It helps you stay on top of your receivables, avoid late fees, maintain solid relationships with both your customers and your vendors. Self-reflection question. Are you managing your cash flow proactively or just reacting when balances start to feel a little too tight? We have seen people pay thousands of dollars in bank bounce check fees, whether it's them or their clients, just because they're not paying attention to what's coming in and going out. Number 4, reviewing cash flow monthly shows you exactly how money is moving through your business, what's coming in, what's going out, what's left to work with. It helps you anticipate your shortfalls, plan for big expenses, and avoid those "we're profitable, so why is the bank account so low?" Like, where's the money going? Self-reflection question. Are you managing your cash flow with intention or just hoping the timing works itself out?
I think a lot of us end up doing that, waiting and hoping and just crossing fingers and saying a prayer and sending out positive vibes. But if we stay in our books on a monthly basis, we can prevent those and we can rely a little bit less on using a magic wand to make it go away. Poof.
Absolutely.
All right, so absolutely. Let's go on to our quarterly. Oh, why does it every time? Sorry, guys, I keep hitting it and it goes back one before it goes forward. My apologies. So next up, we're going to talk about quarterly tasks and quarterly bookkeeping reviews. So this is where we're going to zoom out and take a look at the bigger financial picture. So number 1, reviewing your profit and loss statement quarterly gives you a regular pulse check on how your business is performing before the year-end surprises show up uninvited. It helps you track trends, adjust your spending, and make smarter business decisions while there's still time to impact the outcome. Self-reflection question. Are you using your numbers to pivot and improve, or just reviewing them after the fact when it's too late to change the story? When we're looking at these numbers, consider external factors that could have played a role in the ebbs and flows of your income and expenses throughout each quarter. So here at the Jersey Shore, a large portion of our businesses are seasonal. These businesses are used to seeing extremely high activity during their busy season in the second and the third quarters. But in the fourth and the first quarters, very little to no activity due to seasonal closures. But for non-seasonal businesses, reviewing these reports will help you identify patterns within your business and can help you plan better for those slower periods. Number 2, reviewing your balance sheet gives you a clear snapshot of what your business owns, what it owes, and what is left over at any point in time, not just how busy you've been. It helps you catch red flags like growing liabilities or messy accounts or equity that doesn't quite add up, which is always a fun surprise until it's not. So here's another self-reflection question. Does your balance sheet reflect a solid, stable business, or is it quietly trying to tell you something that you've been ignoring? Number 3, setting aside money for estimated taxes is one of the simplest ways to avoid that "how is this number real" moment at tax time. It means consistently carving out a portion of your income throughout the year so that you're prepared for quarterly payments instead of scrambling for cash. Self-reflection question. Are you planning for taxes as you're earning, or are you treating them like an unwelcome surprise that shows up all at once?
Surprise.
Surprise.
You owe money.
Not all surprises are pleasant. So we recommend getting into the habit of transferring a percentage of your sales to a dedicated tax savings account, preferably high yield, so it can earn interest while it's also collecting dust. The recommended range varies, but a common percentage is 15% of your revenue. Starting this as soon as possible and staying disciplined throughout the year will help you cushion the blow when making those tax payments.
I'd like to interject right here, Dani, too, that this is also a very good recommendation for those seasonal businesses that you mentioned.
Correct.
If you have a busy season, be like a squirrel and store away the nut for the winter so you're not, scraping by in January through March.
So it's a feast and famine situation. While you have that feast, you want to save some of those leftovers so that when you hit that famine season, you've got a nice little stockpile saved up for yourself.
Yep.
So number 4, this one is always fun, and it's always one that we find a lot of confusion with our clientele. Reviewing contractor payments and sales tax filings helps catch issues before they turn into expensive surprises. So this process ensures that all of your 1099 eligible contractors were properly tracked and reported, and that sales tax was collected, filed, and remitted accurately across the correct jurisdictions. So we have a self-reflection question for you here. Are your systems clean and consistent, or are you crossing your fingers come filing time? 1099s is one of those situations where we have 1 month to get it done. That last transaction goes out at the end of the year, December 31st. January 1st kicks in that 1099 season. So you want to make sure that you're collecting W-9s from everybody you're paying throughout the year, because once they've been paid, getting that document is much harder. So whenever you have somebody new that you're hiring, W-9, you want to ask for that W-9. So quarterly reviews are one of the best times to ask those strategic questions, like, are we pricing our services correctly? Is this product or service profitable? Should we be investing more in marketing or maybe tightening some of our expenses? A lot can change in 3 months, so this is where those smart decisions start happening.
Yeah, we really can't stress enough that if you break your year into quarters, especially if you're a seasonal business, you should know which quarters are more profitable, which ones aren't. At the end of each quarter, it's going to help you budget and make changes for the following quarter. So each quarter should be better and better, which will in turn make each year better and better.
Absolutely.
So speaking of that, let's jump into the annual tasks. These are super big picture items that prepare your business for the next year, because who doesn't want to make more money every year? Number one, we want to prepare our books for tax filing, where clean records turn into confident decisions and fewer headaches when your tax preparer comes knocking. It means reconciling all your accounts, reviewing your categorizations, making sure your financials tell the true story of your business, not a who knows what happened, I guess we'll fix it later. Self-reflection question. Are your books ready to support your return, or are they about to start a game of hide and seek with your numbers? If you can walk in at the end of January and just hand a report to your accountant and be confident everything's correct, it relieves so much stress and pressure.
Absolutely.
Number two, reviewing your full year of financials gives you a clear, honest snapshot of how your business performed beyond just we stayed busy. It's your chance to spot trends, measure profitability, and understand where your money came from and where it quietly slipped away. Self-reflection question. Are you using your numbers to make smarter decisions, or just filing them away and hoping next year magically approves? Honestly, you have to look at the numbers to know where the money's going, where you're spending it, where you're saving it, where you can improve it. Number three, issuing those required 1099s is one of those small but mighty tasks that keep your business compliant and off the IRS radar in a good way. It means properly identifying eligible contractors, verifying the information, and filing accurate forms on time. No last-minute scrambling allowed, and knowing the difference between a W-2 employee and a 1099 contractor. So, self-reflection question. Do you have a system that tracks this all year, or are you digging through transactions in January like a financial scavenger hunt, trying to figure out who's who and what's what and who got paid what? Number four, building the budget and a financial forecast for your upcoming year turns your goals into actual numbers. So you're not just hoping for growth and you're not just wondering where it's going to come from. You're actually planning for it and you're going to make it happen. It helps you map out. Sorry, I need a little bit of water. It helps you map out your expected returns, your control expenses, and anticipate your cash flow before surprises hit your bank account. Another self-reflection question. Are you steering your business with a plan, or are you just seeing where the tide takes you? This is where business owners can really start using their numbers as a planning tool. Instead of guessing how next year might go, you can use your number and your data from this year to make smarter decisions next year. You want to make your decisions and you want to be very intentional about where your business is going. So the more intentional you can be, the more you can follow a plan.
Absolutely.
So now that we've jumped on the weekly, monthly, quarterly, and annual tasks, let's take note of some very important deadlines.
Okay, so knowing your deadlines is all about knowing how you have formed your entity and how you have elected to file your taxes. So there are three separate deadlines. The first deadline that all of us bookkeepers face, and even business owners, is the 1099 deadline. So this is January 31st, and it pretty much kicks off January 1st. Once that year is complete, you are compiling your totals for everybody you've paid so that you can file those 1099s. Then we have the March 15th and the April 15th deadlines. March 15th is for your S Corps and your partnership returns. This is also for LLCs who elect to file their taxes as an S Corp. Then you have your April 15th deadline. This is for your C Corps and your individuals, your sole proprietors, your self-employed, and your LLC returns. It gets a little confusing to some, but your LLCs are really just individuals. They're like non-existent entity. There's another word. I'm drawing a blank on it right now. But when you're an LLC, unless you are electing to file your taxes as an S corp or a C corp, you're generally considered an individual, and your Schedule C is attached to your personal return. So April 15th is for those as well as C corps. Then we have May 15th. That's your nonprofit 990 returns. And then once that ends the first set of deadlines, now we're going into our extensions. If you are an S corp or a partnership and you file for an extension, your new deadline becomes September 15th. If you're a C corp or an individual slash LLC who files for an extension, your new deadline is October 15th. And the same applies for nonprofits. If they file for an extension, their new deadline becomes November 15th. If the 15th falls on a weekend, the deadline is the next business day. So it would end up being on Monday, the 16th or 17th. This year, it happened to be March 16th for S corps and partnerships. And if you remember nothing else from today, remember these dates. These dates drive most financial deadlines for small businesses. So that wraps up our list of the most important tasks to do weekly, monthly, quarterly, and annually. It is worth noting that using an accounting software like QuickBooks makes accomplishing these tasks even easier. Spreadsheets are great and they serve their purpose, and we use them for many things on a regular basis. But using them in place of an accounting software can actually complicate your bookkeeping. Using an accounting software allows you to run a wealth of different reports so you can dig even deeper into your numbers, and it also provides review tools that spreadsheets are lacking. So with that, we actually included a bonus today. So we wanted to throw in something a little extra on top of the weekly, monthly, quarterly, and annual tasks. So what we've included as a bonus, let me hop over on slides, are the 5 financial numbers that every business owner should know. Now, these are numbers you want to keep your finger on that pulse point every month, every quarter, every year. First is your monthly revenue. This is the total income that your business generates on a monthly basis. Every month will be different depending on your ebbs and flows, unless you have like recurring. For us, our months can be pretty predictable. Sorry, stuttering over my words. Number 2, your next option or important number to keep your track of is monthly profit. This is what remains after expenses. It's also called your net income. This is what's left over after you've collected all of your income and paid out all your expenses. The third number that you want to keep your eye on is your cash on hand. How much money does your business currently have available to it in case of emergency or unexpected expenses? The fourth number is your profit margin, the percentage of revenue that becomes profit. And then the fifth number is probably the most important of all of them. This is your break-even point. This is the amount of revenue that is required every month to cover your expenses. Anything above this point is profit. So you need to know your break-even point. If you're below break-even, then you're not making enough to sustain yourself. So these numbers act like the dashboard of your business, and they help guide smarter decisions. At the end of the day, bookkeeping isn't really about spreadsheets. It's about clarity. It's about clear numbers, meaning fewer surprises. It means knowing that your business is healthy and being able to make confident decisions instead of just guessing.
Thanks,
So
Dani, for those the dates, the filing deadlines, the reports. A lot of people, I shouldn't say a lot of people, but some people don't know the different deadlines. They don't know the different business distinctions and when and why everything should be filed. And the reports, yes, everybody should have their thumb on their pulse.
absolutely, absolutely. Okay, so when business owners track every dollar and understand their numbers, they start running their businesses with intention instead of reaction. And that's when things really start to grow. Bookkeeping isn't just about tracking your transactions, it's about giving business owners clarity and control. If you're feeling overwhelmed by bookkeeping, you're definitely not alone. Most business owners that we meet started exactly the same way, juggling everything themselves. If you ever want help getting your books organized, understanding your financials, or building a system that actually works, we offer free consultations where we will simply talk through your business and see if we can help. And if nothing else, we hope today gave you a clear roadmap of what a healthy bookkeeping rhythm looks like. And with that, we are going to transition to our Q&A. Let's see, we have one question in here. Are there any additional steps that nonprofits should take throughout this process? Absolutely. Nonprofits have an extra layer of recording and transparency that is needed because they are a nonprofit. So I want to kind of revert back to the receipts with this to answer this question. Most businesses, honestly, almost every business we've worked with, generally it becomes a habit of you just filing away the receipts, filing away the receipts. One of the things that we always recommend is the digital copies. So we tend to use a software of our own, but however, QuickBooks, if you use QuickBooks, which is the most common software, they have an app that has a feature where you can snap a photo of your receipt and attach it into your book, into the books. When you attach these digital receipts to the transactions, it creates a clear paper trail. Should there ever be an audit, everything is at the auditor's fingertips. It saves you time digging and searching for transactions, searching for paperwork, etc. Additionally, with nonprofits, there come a lot of grants. There's a lot of grant activity within nonprofits. Grants often expect a higher level of reporting. And so one of the things that we would suggest as an additional step for nonprofits is class tracking. This is something that we implement for all of our nonprofit clients. It creates separate profit and loss reports for each of those grants. And that is very important for the grants and reporting and submitting with the grants. So that would be my answer for the additional steps for nonprofits. Does anybody else have, oh, here we go. What is one bookkeeping mistake you see most often that businesses don't even realize they are making? Oh my gosh, there's several of these.
Start.
Where do we start? That's a good point. Debbie, why don't you start by, let's talk about sales taxes and the liability and how it's not an expense.
Yeah, so your sales tax, when you collect sales tax, that's not your money. First of all, you're basically collecting it on behalf of the state. So it should go into a liability account. And then when you pay your sales tax, either monthly or quarterly, which depending on the state you're in, they determine whether they want you to file monthly or quarterly. And then when you make your payment, it reduces your sales tax liability. It's an ongoing thing. That can be tracked several ways. If you use QuickBooks and you run your sales through QuickBooks, that will do it automatically. If you're using an outside POS system, you have to do a little finagling because you have to take your gross profit and you have to remove the sales tax, and then you need to journal it into your software. If you don't do that, you're paying taxes on sales tax as profit when it's not truly your profit. So some of the other things we see, people just not categorizing correctly. People, if they're running their own payroll, sometimes they run things through as, again, expenses when part of it's a liability. They run things through payroll when it's really an independent contractor. It doesn't seem like it's a big deal, but it really is a big deal when it comes to IRS reporting and your workers' comp audits. They're another thing. Like everything reflects into something else. So to do it properly makes your life just so much easier.
What we see the most is that when they're making those sales tax payments, they're coding it as taxes paid. It's showing up on your profit and loss as a business expense, but it's not your money. It never was your money. It's the consumer's money due to the state. So we do see that the most. And also, as she mentioned with payroll, we see the same thing with payroll. There's typically three transactions that come through: your payroll fees, the payroll taxes, and the wages and salaries. However, if you're just coding those three as wages and salaries, payroll taxes, you're actually not, it's not accurate. And then it's going to require year-end adjusting entries. So generally, typically on a monthly or on a payroll period basis, we should be recording the payroll as a journal entry and then matching those transactions to the entry. So this is one of the most common, those two, sales tax and payroll, those are the two most common issues that mistakes that we see in books.
I have one more.
Oh, okay. We have one more.
Interest expenses on loans.
Oh, yeah.
So many people forget to break out and record the interest payment. That's an expense that you get to take as a deduction. Don't miss out on it because you don't feel like looking at your statements.
Mm-hmm.
So it counts. It counts.
It does. And it adds up quickly. It adds up.
Yes.
All right. So next question from a Jenna Dunn. I'm an independent contractor for the first time. Is there a good app software, free preferably, to scan and track receipts? There actually are a lot of different softwares out there. I would have to do a little bit of Googling and research for you. We tend to work with QuickBooks Online, and so that's what we often refer out. If you happen to use QuickBooks Online already for your business as an independent contractor, you should. There are some very simple ones like Simple Start that are very inexpensive. There are also free versions like Zoho Books. But as an independent contractor, you're now considered a business. You are not having your taxes withheld. So you want to track all of your expenses as deductions. So with that being said, you want to track your mileage. You want to track anything that you purchase for the work that you're doing, softwares that you're using. You also want to keep track of your home office deductions. For example, like if you have, I'm just going to throw round numbers out to make it simple. If you have 1,000 square feet and you're using 100 square feet as an office, then 10% of that space is a 10% deduction from your rent or mortgage, your electric, your gas, your water, even mortgage interest. So home office deductions, you should set up a set of books to track all of that because you're going to need it to save on taxes. But with that said, I can pull some app. I think there actually is one called Receipt. I'm gonna have to look for you. So I will pull that and we will get your email and send that over to you. But you can do either way. If you did go with a QuickBooks account, they have a free app that downloads to your phone. And it has a receipt feature. You just snap a photo of the picture, it uploads the receipt right into the app. But there are some standalone apps out there as well.
And depending on the things you purchase, within your taxes, a lot of times if they're smaller, you can expense them in full the first year, as opposed to larger purchases like vehicles that get amortized over several years.
Exactly.
So next questions from Chip and Ruth. Are you correct in stating that the tax year 2026 1099s will only need to be filed for payments to others of 2,000 or above or more instead of 600? You are correct. This 2025 was the last year, was the $600 limit. And starting in 2026, it is going to be 2,000. And we are very, very, very grateful for that change.
It's going to simplify for everybody, for the business owners, for the bookkeepers, for the accountants. It's going to drastically reduce the amount of forms that need to be filed.
Yeah, I think 600 was a way too low.
Way too low. Considering it went from like 20,000 down to 12,000 down to 600, it was a big drop. So with that said, the amount of forms drastically went up, and therefore the cost to file the forms drastically went up. So typically, whether it's a bookkeeper or accountant, there's typically going to be a per form filing fee. So it will eventually, once that kicks in, it's going to save everybody a little bit of money as well, just on filing 1099s. All right. Do we have any? And you know what? I'm actually going to add to that a little bit. I'm going to give a little, and I know, and consider it another bonus. It's just another area where we get the same questions every year. And it's also where we see the most confusion with clients. W-9s versus W-2s and 1099 contractors. Okay, so W-2s are employees. These are people that you're paying on payroll, you're withholding taxes, and those taxes are being remit to the state on behalf of the business. For W-9s, these are 1099 contractors, or W-9 or 1099s. The W-2 is it's kind of the same thing as a 1099. It's really the same document. It's reporting the income that you earned throughout the year. However, they are different because a W-2 employee has taxes withheld, whereas a contractor does not. And so they are similar but different. The question is, who's a contractor? That's where we get the most questions. Who is a contractor? Who do we need to issue 1099s to? Anybody that you are paying to perform a service for the business that is not an employee needs to be issued a 1099. However, there is a caveat to this. If they are an LLC that elects to file as an S Corp or a C Corp, or if they are an S Corp or a C Corp, they do not need to be issued a 1099. This is why asking for those W-9s upfront before payment is so important. Once you've paid them, getting those W-9s is like pulling teeth. Every January, we spend the entire month chasing people down, trying to get their W-9. Your bookkeeper cannot ask this in advance because we are not aware of them in advance. We won't become aware of them until we see the transaction in the books, which means they've already been paid. And so at that point, it's like you're pulling teeth. So we always recommend to all of our clients, to anybody that we talk to, whenever you're hiring somebody new, whether it be a bookkeeper, an accountant, a lawyer, a new landlord, we have to issue 1099s for rent payments paid. So if you move into an office and you have a landlord, they need to be 1099. A marketing specialist, somebody, any business consultants, professional fees, repair and maintenance. If you have somebody, you spring a leak in your office bathroom, you have a plumber come out, you need a W-9 from that plumber. If
Lawn maintenance, if you have someone cutting your grass every week.
Somebody cutting your grass, somebody maintaining your food truck. I know that Donut Envy has trucks. If you're having repair and maintenance done on those, need to be 1099. So it's really any service. If you're purchasing goods, products, none of that needs to be 1099. It's only for services and individuals or companies that you're paying income to.
And the difference between an employee and a contractor, an employee, you've hired them, you determine when they work and what they do. An independent contractor, it's freelance. You're asking them to perform a service for you, but you're not controlling their hours.
It's really all about the relationship. The IRS determines the two based on the relationship. If you're managing and controlling the time, the how, the way, the when, the where, and the what, that's an employee. If it's someone that you like, they come in to repair something in your house, they're putting up new drywall or something, that would be an independent contractor. Okay, do we have any other questions? I like the questions.
We could go on for days.
No.
Well, if there are no other questions, we'd like to thank you all so much for joining us for lunch today and for giving us the opportunity to be your bookkeeping resource. We'd love to we already opened it up for questions.
We would love to. Actually, I do want to say one more thing, Jenna. I will get your email from Danielle or Debbie or Sandy, and I will send you an email with a couple apps that options that you can use.
And
Dani, I already emailed you that. Yep.
Perfect. Awesome. Thank you.
And if anybody has any questions that you think of later or you just forgot to ask or it pops in your head, feel free to shoot us an email and we'll be happy to answer it for you.
Thank you both so much for, first of all, amazing, great information. Honestly, so good. I'm so excited that we're recording this. This will be on our YouTube channel once we get it up there. And then also thank you both again. Thank everybody for joining us today. If you haven't already registered for our Beyond the Business card for next Tuesday, please feel free to do so on our website. And also while you're at it, check out our newly designed website. But again, Dani, Debbie, thank you so much for doing this for us. So appreciate it. Amazing.
Thank you so much for having us. It was an honor to be able to present today.
Yep.
Awesome. Thank you.
Thank you.
Have a great afternoon.
Have a great afternoon, everyone.
Bye-bye.
Bye.